The store value Maxis are lazy. Let's take a look at where all the money is in the world. This is the 2022 version of Visual Capitalists, all the money in the world. Um, Funny enough, they have SBF on here. Um, so, cryptocurrency, and this is a couple years out of date for crypto, so $2.8 trillion overall. Right now, Bitcoin's a little above two by itself, so we can just call this a drop in for uh, maybe these are 100 billion each, so uh, 700 billion. It's a little less than that, but we'll just say Bitcoin's something in that range, like 7 blocks. Um, so the narrative here for Bitcoin is that it's a store of value, and that's the most important thing for money to be. So much so that means of exchange just isn't even relevant or important. Well, let's see what the situation in the world actually is. Where is all the money? So gold is currently the gold standard store of value in the world. You got a pretty good chunk of it. Looks like a big market compared to Bitcoin. A lot of room to expand. Gold, we don't have to adjust too much for time. It's about the same now as it was in 2022. We got $11 trillion. But if you look at where this is at, this is all jewelry. Bitcoin isn't going to replace jewelry. Below ground reserves, also not going to be replaced. Not entirely sure what's in other. Um, so, what do we have here that really counts? Bars and coins, obviously, and reserves and central banks. And maybe a little bit of this is reserves somebody else has. There might be a few private companies in the world that have some small amount. I think Overstock.com has a small amount of gold reserves, but most other entities don't really have it. So this is maybe optimistically like somewhere between maybe half of the supply here, um, depending on how you want to weigh things. So we got maybe optimistically here $5 to $6 trillion in value. Uh, that's the potential market that Bitcoin is going against. Um, yes, there's a lot of dollars in banks too, but most of that money moves. Most people aren't piling a huge amount of U.S. currency in a bank account. Well, for one thing, there's a pretty limited amount of insurance on it. For another, it degrades in value. It isn't there. People are storing their money if they don't want to lose its value. They're either putting it in something like gold or they're investing it somewhere else in the economy. Um, so this is really what Bitcoin's competing with for store value. This, and even if you argue it's double that with you know um, dollar reserves or something like that, you're looking at $5 to $12 trillion. So that seems like a pretty good potential to expand into, right? But it's not a crazy potential. It's a 6x at most, and like it or not, it's not going to take this whole market. Gold isn't going anywhere. Um, for one thing, it's way more stable. The Bitcoin folks like to pretend like Bitcoin will only ever go up and never go down, but anybody who's been in the Bitcoin market for any length of time knows that no matter how good the rally is, um, it does go down. It goes up and down a lot, and those are maybe not hugely concerning swings for those of us who have been in the crypto market for a decade. Um, but for most people in the real world, for most people in businesses, having massive double-digit swings in a day or in an hour is just not something that they're going to risk. And gold is a much more reasonable store of value as far as actually retaining the value it had when you bought it. There's very low confidence that Bitcoin will do that from any given moment to any given moment. Even if they're right and it does overall trend up, you just don't know what it's going to be worth at any given point in time. So this is the goal anyway. Let's look at The other thing that money is known for, being a means of exchange to buy things, which honestly is the only reason anybody stores it anyway, is because eventually they want to use it to buy stuff. What's the point of storing money you're never going to spend? So let's scroll down to the money people actually spend. So this is the part I think is most relevant. The um, total money supply in coins, banknotes, money market accounts, savings checking. This is the stuff that this is the money that's moving around the economy. This is the money that's being used to pay your bills. Some of it's in time deposits and counts as in the store of value, but most of this is money that's moving around. Most people have income coming in and expenses going out, and most of the money is flowing through that. Even most people that make a really large amount of money are are sending money out at a rate similar to, or sometimes greater, than what they're bringing it in. And here we have an $82 trillion market cap. This is this is the market for a means of exchange. 82. And we're looking at up here in store value, 6, maybe 12 is the super insane bull optimistic case versus 82. So you have to ask yourself at a certain point, why are the Bitcoin Maxis focused on this and disparaging of this? They don't even want to consider that this is valid. And I think the reason is fairly straightforward. I think they're lazy. This requires no work. It doesn't require any special, you know, ability or performance in your network. Bitcoin can be slow, it can be expensive, nothing has to be improved. You don't have to consider if it's harder to use than Venmo or less clicks than Cash App, or if you can explain to older people how to do it. It doesn't have, and there's no effort. None of the people who are buying Bitcoin and storing it, they don't have to make any change in their life at all. They don't stop spending fiat. They're still writing checks for everything. They're still keeping money in the bank to do all of their spending and bill paying. They're not actually changing anything about their life. They're just taking some of their extra cash and they're betting that this is going to go up. But nothing has changed. They haven't taken anything out of the US dollar economy, the actual movement of money from one point to another, from one person in business to another. This, on the other hand, while it's a much bigger market, actually requires a little bit of effort. You have to put some attention into how your how does your wallet work? How quickly can you spend and respend transactions? How much do they cost in volume? If your business does tens or hundreds of thousands of them, what does that add up to? How much friction is there? Um, is it difficult for people to understand and use? And perhaps most importantly, do you have to make any effort at all to do this? And it's not a lot. I don't think it's terribly difficult to use crypto for most people at this point, but it's some effort. It's less than zero. It's less than put it in a pile and hope the number goes up and tell everybody else to do the same thing so that your number goes up. This requires some minimum level of change in your own life and way of doing business. It requires that you install a plugin in your online store, that you um, hold some crypto in your wallet and learn how to actually safely store it, that you have it available, that you know learn how transactions work and get comfortable actually using the thing that you're invested in. And frankly, I think they completely have the cart before the horse here. If you're not comfortable using and exchanging your money, why should you be comfortable putting a huge amount of it in a long-term investment? I think you should do this first. If you aren't comfortable using your money as money, then maybe you shouldn't be using it as a store of value. That's my 2 cents on that.